Hi everybody, and welcome to this new video tutorial attempting to give another example on how to analyze the markets in this third week of December. Today is Wednesday, and let's go straight forward to our situation. I have an initial report to show, because on Monday I was completely missing an opportunity with New Zealand dollar against other currencies. New Zealand dollar was getting strong, and a big move has already happened in the very first hours of the morning. So I decided to put some sell and buy limits that were not hidden at all. So this is why I had this pending orders that I decided to cancel because they were already gone. And on Tuesday, anyway, it happened. This is a balance account made for the example as usual, as I do always in my videos. And what happened on Tuesday is that another currency came out quite strong while New Zealand dollar was retracing, and now New Zealand dollar is has become strong again against Australian dollar, which was Australian dollar. So I decided on Tuesday morning, the 12th, as you can see here, to compare the values analyzed on a daily basis and on a weekly basis as well, about how to hedge Australian dollar, which was strong, against some currency pairs that appeared weak. Even if I was not that much confident, I decided also to trade against Swiss franc, as you can see here, Japanese yen, that was quite doubting, and in fact these are the ones with lowest values. Let's also do this in points so that we can see better. And undoubtedly there was a correlation to be traded with the pound and with Canadian dollar. So it's also a swing trading situation. You may notice here a swap condition, and now we are at the point, as you may notice on a weekly basis, that Australian dollar and New Zealand dollar are quite strong, the same, and there is this battle between the two of them against a GBP, Swiss franc and CAD quite negative, and Japanese yen and euro. But normally euro and dollar at this moment I'm not focusing that much. I'm focusing more on other crosses. So what I decided to do, as I was saying on Tuesday morning, to inject some trades to hedge in this case, so to lower the risk by differentiating the financial instruments and trading Australian dollar as strong. New Zealand dollar was retracing, so in that case there was a kind of change of element in the market setup, and now they're quite similar on a weekly basis, but in a daily, as we may notice, New Zealand dollar has got more strength than Australian dollar. So I'm almost about to close these trades now. And so let's do this, because I got enough profit from more than 1 day of trading. And let's do again another detailed report. Save this statement as well. Okay, so as usual, by analyzing the markets very quickly, on the longer time frames, I mean monthly, weekly and daily, and also focusing sometimes on the 4 hours chart, if we notice a kind of coherence on the values of the currencies, there can be the opportunity to evaluate only few charts above the 28 charts that we normally can trade, and therefore we have to observe first. As usual, some of you made me notice that I don't put stop losses. I have developed this kind of way to analyze the markets, but it doesn't mean that I'm perfect and that I can have a cutting edge on all the things and be very precise. But I prefer to rely to the fact that by analyzing the markets in the whole assets that are given, that can be an element of high probability, then provide to my broker levels of stop loss and take profit. I take profit the moment it's enough for me, and or probably that I have an intuition that currency from that point on might retrace, so it's better to get out of the markets. Sometimes I'm right, sometimes I get enough profit, but then I could have taken a little bit more. But we know always that after a big move there can be even days of ranging and consolidation. So I don't like to leave my currencies to leave my trades to more days of swap conditions, spreads that then can rise all of a sudden, and things like that. So it's always a probability game. There is no certainty on these forecasts. There's only a better vision of the things, a little bit more clear vision of the things, and we can do this also by taking all the charts and getting them one by one, or analyzing only a few charts. In this case it was Aussie Swiss franc, Aussie yen, GBP Australian dollar, and Aussie CAD. Okay, here I have Australian dollar, New Zealand dollar, and as you can see from the ending of the Asian session and the overlapping with the London session, there was a decay, which was meaning the weakness of Australian dollar against New Zealand dollar. So this kind of uncertainty and the breaking of some levels, for example this line, yellow line or yellow box as you can tell, was for me a kind of alert to decide not to go further. Yeah, there are some issues that some of you requested me to clarify, because some of you are saying, well, but how can I do that if I don't have your expert advisor? You can always analyze the charts or analyze the data on a higher time frame and making some computations on Excel, which was from the beginning of my studies was in Excel. Then what I did was to try to shape the formulas as much as possible to be embedded on an expert advisor that could have calculated tick by tick the values on every time frame. And the moment that trick was made, that for me was possible to analyze the charts almost instantly and decide if it would have been a good moment for trading or not. And the fact that I'm doing these brief videos, it's also because no matter what, but at this moment, now we are the 30th of December, I am showing you anyway some values. You can take notice of them on a monthly basis, on a weekly basis, and you can stop the video for a while and take notice of them, and on a daily basis. Of course, now we are at the ending of the day, and there are some market configurations that are accomplishing the American session, and probably there will be another jump. See here how the volumes are displayed, but that's not the only thing that we must see. We must also see a kind of correlation between currency pairs. And what we are analyzing here, for example, is what is happening in the 1 minute chart. So sometimes I hedge only 2 currencies because there are only 2 currencies well defined in this panel. But other times there are maybe 2 currencies that can be traded, and we're talking about not very long term trading, but just day trading. But we can achieve enough pips that we might then have that with only 1, 2, 3, 4 trades we can have this kind of results. And this is very simple math to apply. And once you have identified that Australian dollar is strong, and it's quite strong, and at the same time there are more currencies that are weak, it means that Australian dollar is long, and going long in Australian dollar, they are going short with Swiss franc in this case, with Japanese yen, with pound, and with CAD. Or at least these were the values that at this hour, okay, 8:47, 8:49, 8:50 in the morning, they were the more evident, the more relevant. So at that point I decided that I should have distributed the risk of my trade instead of putting stop losses that could have been probably catched, voiding the possible profit, and let the market breathe a bit. Also because there is the component of the spread that we always have to deal with. And the longer we see, the more we are analyzing the longer time frame, the higher time frames, the more these results, which are correlation between currencies, are stable, at least for enough time to make some pips. I am thinking if there are some other questions, but I received a lot of emails, and also I got a lot of Skype conversations with some of you. And actually, I think that to have a better understanding of what I'm saying, you can also refer to the other videos, the previous videos I made, and see what values are displayed, and understand that the trick in the Forex, the difficult part, is that these values are very hard to detect by only taking a couple of currency pairs, just because you think that the majority of liquidity is in euro and yen and GBP, USD, so you are always focusing on those charts. But you have to understand that Forex is like just one big number, and all these are fractions of this number. The fact that we are having a base and a quote where euro is at the top and nominator, and the denominator is USD, it's already a suggestion that we are talking about a fraction of something, and the whole is the zero sum that comes from all these values put together. So analyzing only specific charts doesn't mean that we are analyzing the whole market. And the calculations that we can do now, of course, I'm also using the lower time frames, especially for the graphical module that I am developing when I have time, of course, because it's very tiring sometimes to code for hours. But, and in this case, of course, I am applying the same algorithm to a lower time frame, and I can afford also to have a vision of a very short time frame analysis. But from a larger view, we may notice, let's look at 5 minutes, we may notice the channeling that it's occurring at this moment, and we also can see how the price actions is distributing along the main market sessions in the world every day. And we can do some assumptions also on the fact that we can compare the American session of today with the American session of yesterday and yesterday before, and the same for the European session and the ASEAN session. So the evaluation of what to trade is not given only and exclusively by these values and stop it. In fact, as you saw in my balance here and report, I was so eager to also trade New Zealand dollar that even if the move was done, I decided to put some pending orders, hoping in a very fast retracement and then proceeding in that direction. But that didn't occur, so I made sometimes also evaluations that are not responding, or maybe we don't know what kind of money institutions are moving. We can always know after. But when we assume that we are analyzing the overall strength and weakness, and we see that in the monthly, New Zealand dollar is strong and also Australian dollar is quite strong, and GBP is very weak, for example. And in the weekly, there is also this coherence, and in the daily there is also this coherence, even if the values are a bit different. But you know that every currency has its own range of oscillation, and then we can make some assumptions for the long term that can be hours, and wait for the move if the move didn't occur yet. Okay, so even in this example, the percentage was quite positive, and with satisfaction I can say that realizing this profit in 36-40 hours, it can be even enough for the whole week, by only trading at the end 4 assets and let the market go without any problem on the stop loss. Because if, for example, I would have noticed that the value of Australian dollar was decaying like it's doing now, this is why I am closing the trades, but on a daily basis, and that my balance would have been negative, I would have closed the trades and take the little loss instead of hoping on something that would have happened. But the moment I saw that the Australian dollar was getting even stronger than the New Zealand dollar for at least the day of yesterday evening, I decided to let the trade evolve till this evening and then close with this decent profit. Okay, so I thank you for watching this video and also the videos before, for subscribing my channel, and for your emails and feedbacks. And I of course invite you, if you're curious, because a lot of you are asking me about how to achieve this kind of approach, to watch my previous videos, on which also I show in some webinars how to analyze with the charts bar and some currency pairs and make some assumptions, even if in a restricted way. But personally I developed this for my own strategy, and what I can do for those who are interested, of course, to have it, you have always to contact me privately. But for those who are willing anyway to have an insight in the markets, what can I do by making this video? Because of course today, tomorrow can be different, okay? But for as regard the weekly and the monthly, these values are still have some meaning, and if you can get some information from these values by following the tutorials that I've made, they can be also good for you and for your evaluation. Of course, I'm not suggesting to trade anything, and in the sense that trading is very a personal thing. I cannot tell you do this, do that, because I am doing this on my time framing, on my daily cycle that can be different from you. You can be on another part of the world, you can work while I am in front of the trading platform, or vice versa, and I can give you an information that for me is in time, and when you get it, it's out of time. So what I'm showing here is an example on how to do the things. But of course, if you have seen my previous videos and got some understanding and of these values in themselves, then of course these monthly, weekly and daily values that I am re-showing you again can be useful for adding a point of evaluation along with your methodology of trading, because there are many methodologies for achieving results in trading, and I'm not saying that this is the only one, but this is mine. So this is my own way to approach the markets. And what we see here for sure is not a forecast, but it's what is happening in real time. An evaluation of real-time evaluation of what is going on in the markets. Okay, so as usual, take care. Thanks for everything, for supporting, and have a good time and good space. Bye.